The board of a chocolate-making company made the decision to set up a new warehouse in a new area at great expense to the entity without making adequate and necessary inquiries into the local conditions and support services. Operating their main warehouse in a dysfunctional municipality without adequate water, inconsistent electricity supply, and connecting roads full of potholes made the operation of their business virtually impossible, meaning that this expenditure ended up being wasted. As a result, the company had to relocate their entire factory to a more functional municipality in a different province. After the failed misadventure, the company and shareholders came knocking at the door of the board for compensation. Welcome to episode 3 in season 2 of Ensuring Trust with Leppard, a podcast where we share insights and the stories behind the Leppard underwriting team who are in the business of protecting your reputation. We're talking about directors and officers' liability, and in particular, how Leppard is working to bring more clarity and ease of use regarding this coverage. To help us understand more about D&O is Ryan Naven, Senior Directors and Officers Underwriter at Leppard, and Carolyn Roach, Head of Professional Indemnity and Financial Institutions. Welcome to you both.
Thank you, and welcome back. We're happy to have you back.
Thank you for the reception. So, Carolyn, I've been doing some online stalking of your colleague and discovered he's an avid football and golf guy, right?
Correct. Essentially, really anything with a ball. Take that how you want, but top two certainly football and golf.
Okay. So since he's outdoors and he's really active, I figured we could start with dessert first this time round. Regarding the example mentioned at the start of the episode, Ryan, how would D&O insurance remedy the situation for a director caught in the crosshairs of a similar situation?
Yeah, so first and foremost, the cover comes into effect immediately. Leppard provide the insured with the legal assistance as soon as it is alleged that the insured has acted negligently.
Yeah.
The legal assistance provides the insured with a dedicated legal team that prepares to defend the directors against those allegations. With the legal costs of that defense being borne by the insurers. The legal proceedings go on for a number of years, so you can imagine how quickly those legal defense costs become exorbitant. Once a judgment has been passed, and should it be found that the director acted negligently and without due diligence, the settlement awarded by the courts in the favor of that plaintiff would be paid by Leppard.
And I also noted that you specifically mentioned shareholders, Ryan, and I agree with you. Shareholders would genuinely be the claimants in most of those scenarios.
Yes.
But I think it's also important to note that there are a number of stakeholders who would be affected.
Okay.
For instance, the employees who may not be able to relocate to another province, and now their livelihoods are in jeopardy. The local communities could also be affected as a result of the loss of jobs. Suppliers and customers could potentially also incur greater costs as a result of the closure and the relocation. And all of these stakeholders could essentially hold the D&Os responsible for that decision. So as you can see, the decision of the directors are very far-reaching.
So, when you hear the phrase negligence claims, unconsciously, it conjures up the idea of someone who was intentionally going out of their way to do something wrong, which isn't always the case. But from the Leppard material I've read, the intent of directors and officers liability cover is to allow directors to make good decisions without being too risk averse, right?
Correct. Yeah.
So can you tell me how Leppard is making things simpler for insureds with this cover?
We're actually currently redeveloping our D&O products.
Okay.
Directors and office liability products at the moment are very technical and their structure quite complex. And so we've decided to take a different route to that of the rest of the market. We're essentially trying to simplify D&O insurance.
And I must say, I was always under the impression that D&O policies could never be simplified because they're so complex in nature. But actually, having been involved in this redevelopment of the wording, I've been quite surprised at how simple it can actually be made. And I think we also just need to note that Ryan and Leppard haven't just jumped into the simplification wording without doing some research. We have seen that it has been successful in other territories around the world, and we've taken on their learnings and will obtain legal opinions to make sure that even though it's a less complex wording, we're still covering everything that the DNOs can be held responsible for.
Okay. So short of calling it the Dummy's Guide to DNO Insurance, which I would be keen to buy if anyone is thinking of publishing that, how do you simplify such a technically complex product?
Yeah, sure. I can assure you with great difficulty. It's no easy task, but with the expertise we have here at Leppard, it does make it somewhat easier. But to get back to your question, as previously mentioned, the DNO insurance is extremely technical, and the reason for this is due to the legislation nature of a DNO policy, and more specifically the Companies Act that codifies the duties and the responsibilities of the directors and officers. And the remedial actions that can be taken against them by stakeholders. Currently, our product is structured into 3 sections. Side A, individual company; Side B, company reimbursement; and Side C, which is your securities liability cover. Our new wording won't be structured in this way. We intend to not split the product into 3 sections, but rather combine them into a singular sort of indemnity clause, if we can call it that for now. Our reason for this is that we believe that it doesn't really matter from which section A, B, or C a policy is triggered. What really matters is that the policy is there, and the policy is there to respond when the claim does arise. In thinking about our new wording redevelopment, it was necessary to do a fair amount of research about the actual needs of directors. And this led to a few key objectives: the need to precisely define the true purpose of the policy, remove the language complexity, discard the lesser coverage areas which are built up over the years as the market moved into a very broad catch-all cover, most of which in research seems unnecessary, even not wanted. Rework the pricing structure and a policy wording that flows and is easier to read.
One of the things I enjoy hearing is that it doesn't really matter whether to side A, side B. If you take out insurance, you want to know that it's going to be something that when the time comes for you to call on your insurance, it's going to pay. It's going to do what it needs to do.
Well, yeah, that's exactly it. You pay a premium, and the idea is your insurers are there to respond and to honor that premium you've paid and to honor the contract you've made with the insured. Again, A, B, C, D, F, G. We can go through the alphabet. It doesn't matter. We want to honor the contract. We want to provide the directors with the cover they've essentially paid for.
Carolyn?
Even though a Dummy's Guide to DNO doesn't really exist, we do have some quite informative material on our website, which does provide some very good beneficial information. And in our DNO development, it has become quite clear that you need to have a customer segmentation, and that is crucial. Our new approach suits South African domiciled risks with little to no kind of cross-border work and an uncomplicated shareholder structure. We're going to focus on business and strategic objectives where the balance sheets have fairly low debt or not really leveraged very high. This doesn't mean that we're not going to support the larger, more complex programs, but this is a more tailored wording for the traditional DNO SME type business.
So definitely more focused in its approach and who it's actually targeting.
Yes.
All right. So I have a copy of Leppard's current wording. This is the 21st century, so I don't have paper. I have it on PDF. I have a copy of Leppard's current wording in front of me, and it seems there's a lot more to than just side A, B, or C, and more specifically, a lot of extensions.
So yes, this is exactly what I was referring to when A, B, C, D, E, F, G. I think if I'm not mistaken, I don't have it in front of me. I think you do, but there's a bar. It must be near 14, 15 automatic extensions, and then that's followed by more optional extensions. Yes. And this too will be simplified in our new wording. The ideal solution to this is not to have any of the extensions of cover at all, but rather that it's not, if it's not an exclusion of the wording, then it's covered. So I think, for example, safety legislation and corporate homicide, it's an automatic extension currently on our wording. If there's not an exclusion for claims related to or results of something, safety legislated or corporate homicide, then it's covered.
Ryan, during the break, I was browsing through the wording again. It's indeed very technical, and only after reading a specific section a couple of times do I begin to understand it. Will the new Leppard wording address this in particular?
Yeah, so this is actually, if not one, the most fundamental reason for our wording redevelopment. The wording currently is not the easiest to follow, as you've experienced. It contains a lot of industry legal jargon, and the rest of the market has a lot of technical elements. So our new wording will be completely plain language to make it easier to understand. You shouldn't have to read it 3 or 4 times to understand it. It should be read once and fully taken in. But it is proving to be very difficult. I think I said that earlier. Yeah. But we do believe it's the way forward.
Yes. Okay. Seeing it's the way forward and you're trying to make it more simpler, would it be simple enough that an insured can do a referral elevator pitch to a golf buddy during a 9-hole round of golf? Right? So would you say that the new Leppard D&O wording is unconventional in respect of the local D&O market?
Yes, it's extremely unconventional given the structure of the policy. And it will cause some confusion within the market, but again, the plain language element of the wording will clear up this confusion.
Sure. Unconventional might actually be downplaying it a bit. It's a completely new take on the structure of a D&O policy, and one I think the market should be very excited about.
So, Ryan and Carolyn, we're approaching the end of the episode. So, Ryan, I want to get you onto the greens now. You're now on the final green after a well-placed approach shot. You putt this for an eagle to win the round. What's the most important thing you can share about D&O liability that will make the most impact for an insured or possible new client?
Oh, honestly, it's the peace of mind, knowing that you have the financial protection in the event of a claim. It's the peace of mind knowing that you can make decisions confidently, and should the needs arise, you have the legal assistance to back you whilst you continue to focus on the business itself. Leppard, together with its claims handlers and legal advisors, take care of all the legal matters. And so everyone can still enjoy their golf.
And he sinks it, ladies and gentlemen. That takes us to the end of this episode. Make sure to listen to previous and upcoming episodes of Insuring Trust with Leppard on Spotify, Apple Podcasts, and YouTube. To find out more about Leppard products or to get support as a broker, visit leppard.co.za. Till we meet again, make sure your reputation is protected.